Welcome back to Delta Code. I am Delta, an economist with over 20 years of investment experience, using my knowledge to help you become financially independent like I have. Today, I will be discussing the Fed pivot. Federal Reserve in the United States lowered the federal funds rate by half a percentage point, or 50 basis points, as it's known in finance, yesterday. This was a bigger reduction in interest rates than most of the market expected until a day or two before. Seems like the Federal Open Market Committee changed their mind in the last few days, and they tried to signal this through back channels to the rest of the market, where odds of the 50 basis point cut increased from 25% to 60% just the day before. So the market did not fully price this in, and today we're going to look at the portfolio I just made that will benefit from lower interest rates. Strangely enough, as we can take a look, it is up almost 5% today. Since Monday, it is up 5.38%. Having a 5% in return in a couple of days is an amazing return. Am I a genius? Some have said so, but this is how the Fed moves markets, and I have worked in investing and forecasting what the Federal Reserve will do for over a decade. So it is not a mystery. It is called a Fed put. Whenever the markets start to suffer, it is now common expectation that the Federal Reserve will come in and do something to inject liquidity into the system. Now, 50 basis point is a large move, and we are seeing the impact now. But still, interest rates will remain relatively high to the recent decade. In the grand scheme of things, interest rates are relatively low. Anyways, let's take a look at my end of 2024 ideas before the rate cuts portfolio published last week. So had you followed along, you could have made yourself a 5% in total, or if you chose some specific picks like Upstart, you could have had 14% gains. That's the biggest winner here. Other top winners are Coinbase, obviously, and Tesla. Like I mentioned, as interest rates go down, people buy more cars, people buy more houses. Redfin is up quite a bit too. Intel, unrelated, but also generally good if they're going to be borrowing money. We have Match is up today 1.7% so far. Market closes in 3.5 hours. Being in Argentina, this is nice. The time zone, it's my afternoon now, and market isn't closed yet. Another almost 4 hours of market. It's lovely. I'm usually in the Pacific coast of the United States, and the market closes at 1 p.m. It's get up early, and it's done by, afternoon. Match is up to almost $37. Coinbase is 172. Stay tuned. Next week, I will show you my Coinbase forecast. It is not bad, and it's not great. So it's more of a coasting from the previous quarter, but Q4, with the interest rates going down, is gearing up to be nice. Now, keep in mind for Coinbase, I've mentioned this before, is now they're making a lot of their revenue from stablecoins, the USDC. I think it was almost $200 million of revenue. This is them taking money and buying treasuries, which are earning over 5% on, I think, $30 billion or so, 33. So if interest rates go down, that's 0.5% less that they will be making on those treasuries. So expect that revenue item to go down in Q4. In Q3, it's going to be the same because that's the money they already made. Now, this number can remain the same if interest rates go down, but the amount of USDC goes up to make up the difference. That revenue could stay stable and steady, because almost 5% is still decent return for a risk-free asset. Next up, Kohl's. As I mentioned, Kohl's is heavily shorted, almost 50%. This is the most speculative in this portfolio. Google is looking good, in my opinion. Price to earnings growth is 1. They will crush with the AI, I believe, and they are the second most likely company to succeed with self-driving. So, Waymo, let's go. Intel is up to almost $22, up from $18 when I started this coverage. I purchased some options that had a $30 strike price and that expire in December of 2026. This gives me 2 years for Intel to go past $30 or 33 to be in the money. So I am optimistic on that given the current momentum. Next one, AMD, very similar. AI play. NVIDIA is just dominating, and I don't think Intel and AMD are just gonna keep watching NVIDIA take all the gains from AI. Crane shares China Internet ETF, KWEB, is up almost 5% also. China is also going to inject liquidity. Their market is struggling, probably just waiting for US to take the lead on more interest rate. Interest rates are very interesting, if I may digress for a minute. There, as we saw recently with Japan, once they increased their interest rate a little bit, there was a big turmoil in the market where there was a big sell-off in the United States. A lot of markets seemed to almost crash instantly because borrowers in Japan were able to borrow in Japanese currency, the yen, at almost 0% interest. They take that money that costs nothing to borrow, and then they put it in the US market, usually in US stocks or in US treasuries that are giving you 5%. Borrow at 0, make 5%. Sounds great. Also, while doing this, you're exchanging yen for dollars, which makes the dollar's value go up relative to the yen. If billions or trillions of dollars of value of yen are being traded for dollars, that each person selling the dollars is saying, give me some more yen for that, because you can see the supply and demand is imbalanced. More people want the dollar than the yen. So the yen's value dropped down, dollar went up. So not only are you getting the 5% on the treasuries that you borrowed for 0 in Japan, but also now the dollars you purchase are going up in value relative to the yen. And when you convert it back, you can get more yen, pay back your loan plus the 5%. It's double win. So because this was such a no-brain investment, it got leveraged really high from Japanese investors. Now, when the US interest rates go down, that means this relative returns you can get in the United States relative to what's in Japan is slightly less favorable. Now, 0.5% doesn't seem like a lot, but when you're highly leveraged, that can be a lot, which can lead to a deleveraging event where people will sell in the US their bonds and then have to buy back the yen, which will make the yen appreciate against the dollar. And if you're the last person off the boat, you're going to get a worse exchange rate for your dollars to buy the yen as the yen appreciates. He was at 160 to a dollar recently. Now it's about 140. It seems to be where they want to hold it, but it can drop a lot further if there's a lot of assets that are invested in the United States that may deleverage. Okay, so when interest rates change, it is important how the other countries' interest rates are held, because that can lead to capital flows, outflows, or inflows. So now the United States has lowered their interest rates. Now, Bank of Canada, European Central Bank, Bank of England, Bank of Japan, all the major economies will also do something similar to just keep it all the same, because you don't want capital flight and volatility in the market. That was the macroeconomic interest rate parity ISLM model. My brain is melting. Sorry. Let's go. Next up, Upstart. So Upstart, like I mentioned, is up 14% since we started coverage last week. It is up to 40. I think we were purchasing it between $35 and $37. Kind of wish we got some options. This is another, I think they're highly shorted, 30% of float. So this might be, shorts covering as well. Next up, Redfin also benefits from interest rates going down because it's real estate related. If you try to purchase a home in the last year while interest rates have been high, you've noticed that much different than if you try to purchase the home in 2020, 21, when interest rates were zero. You could have gotten a mortgage at 1.5% to 3%, where now it's about 7%, which means your ability to buy a home went down for a lot of people. Or if they're already in a mortgage, about 2%, and they're looking to upgrade, it doesn't seem like a good time to throw away their really low interest rate mortgage and upgrade to something that's going to cost them 3 times as much in interest. So people have put their upgrading real estate on pause until interest rates go down. And now as interest rates do come down, more people won't be prohibited from purchasing homes by interest rate alone, which many have been until now. This is also a big lubricant for the economy because real estate is about 10% of the US GDP. So a big sector of the US economy has been dampened by high interest rates. And now as interest rates go down, more people will buy and sell homes. This will be great for real estate agents, for lenders like Upstart, other banks, for Redfin that uses data to help buyers and sellers find each other online. And when people buy homes, they usually spend more money on moving, remodeling, buying new appliances, decorating. This all permeates through the economy is generally, a multiplier effect. Just one of many when it comes to interest rates. This is why the Federal Reserve moves markets, and monetary policy has such great impacts. Next one, Micron. Micron is up about 2.5% since we started this. It's almost at 90. Micron is one of few companies that makes memory that AI needs to use. As AI generates answers through inference or large language models, they need to store all of this somewhere. All this synthetic data is useful and perhaps will become even more useful than real-world data after a long time. So Micron is a under-the-radar gem, in my opinion. And lastly, Tesla is ripping over 6% today, up to 240. This is, $40 up from their 200-day moving average of 200. This is on the news of them releasing their electric semi-truck, partnering with Coca-Cola, I think, for their transport. And they're about to release a robotaxi, and the full self-driving is constantly getting better. So Tesla is crushing it and will likely be a big winner. So that's the quick update on stocks. Let's take a look at crypto. The biggest winner this week is Sui. Sui is crushing it. It is up 52% this month. So that's a good one. 7 day, it is up 30%. And today is up 12%. So that's the big winner. Again, interest rates going down is generally good for risk assets. Crypto is a risk asset. Bitcoin is at 63,000. Ethereum is almost at 2,500. Solana, which we purchased more of at 135, is now at 143. Our average purchase price is about 20, I think. So we're happy with that one. We also got some Chainlink. We're happy it's up. Polkadot, Near, Uniswap, of course, Sui, as I mentioned, Aptos. We got Polygon, Arbitrum. We did buy more Arbitrum at 50 cents. It is up 10%. But, pretty much everything is up. So it's really, you could have bought anything and been doing just fine this week because the rates dropped. I hope your portfolio is doing dandy. Let me just show you quickly a previous portfolio I made. If you are interested in my thought process, I'm not telling you to do anything. I'm just showing you what I do and how I do it. Hopefully helps you learn. And if I make mistakes, you don't have to. And if I do something clever, maybe you want to thought of it. So together we're better. If you have a portfolio, I would love to see what you have in your portfolio. What are some big either winners or high conviction stocks or crypto that you have in your portfolio? Put it in the comments below. I would love to know about them. Let's share and get smarter together. So this is my high convictions in 2022. Portfolio is up 101% since then. So here you can see I had Atlassian, Twilio, Meta, Elastic, Match, Salesforce, Microsoft, Coinbase, Amazon, Alphabet, Snowflake, Mercado Libre, Datadog, Shopify, Block, HubSpot, MongoDB, and Trade Desk. The biggest winners are several 100%, which are Twilio, Meta, Mercado Libre, Coinbase, Trade Desk, Shopify, Amazon. Those are the biggest winners. The biggest losers were Square, Snow, Team, and Match. I think Match is being down 50% since then is a lot. It is on my buy list, as you know. Snow, I did sell because the CEO left. And when the CEO leaves, from my experience, that's usually a really bad sign. They know something about their company and they're over it. We saw this from recent memory with Stitch Fix. Once their CEO left, I thought, okay, her reasoning was, oh, I've done this for a decade, I'm over it. But as soon as she left, the company just imploded. So I feel like when the founder or CEO leaves, it's usually a bad sign. So I sold pretty much all my Snowflake. Teams, it's decent. I think Square is probably the best on this losers list of to come back possibly with a crypto boom. But unrelated to crypto, because we don't need any more crypto exposure, it's Match Group for me, because people gonna date and people gonna boink. And it's the most human thing. We'll keep our eyes on the portfolio. End of 2024 ideas portfolio. We'll keep you updated, hopefully weekly or daily or whenever we make videos. I am Delta, an economist with over 20 years of investment experience, helping you become financially independent like I have. I hope today's episode was insightful for you. And as we can see, the portfolio is doing just dandy thanks to the Fed pivot rate cut. Make sure to like and subscribe to stay up to date to the latest news for crypto and stocks and updates on this current portfolio. Thank you for tuning in. And as always, may the force of compound interest be with you. Peace.